Tuesday, February 12th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the difference between money and currency, a little bit about the history of banking, and also what you need to know in order to protect yourself from the coming implosion of the current monetary system that we're under. I don't know the exact date when it will happen, but it will definitely happen only because it's unsustainable and it cannot keep going on forever. So before that, of course, we'll have a look at the markets this morning from London, see where they are. It's just going past 7:30. It's 7:39 a.m. The markets are still fairly stable compared to what we saw in December. Of course, the U.S. government came out, of course, and the Working Group on Financial Markets, the PPT, or the Exchange Stabilization Fund, whatever you want to call it, have virtually, they have intervened. The Federal Reserve has become less hawkish. There's talk now that they might not even raise rates again this year, or if they do, it might only be once. A couple of months ago, Goldman Sachs was saying that they're going to raise rates 4 times this year. And there's even talk that they're going to stop unwinding their balance sheet or doing quantitative tightening, which is something they told us that was going to be like watch paint dry. So much for watching paint dry, right? They realized that things were starting to look quite shaky. Anyway, let's see what we're doing this morning. We've got spot gold, which actually traded down to 1303, I think, yesterday. Right now we're at 1311. We're up 3. The range has been 1306.50 to 1313. So gold still consolidating. I guess we need to break through 1325 on the upside. Below the support is going to be 1300. Silver is up 7, so silver outperforming slightly, up 0.5% at 1578. Range has been 1567 to 1580. The Dow is up 118. There's some headlines this morning saying that stocks buoyed by deal to avert U.S. government shutdown. S&P 500 is up also 0.5% at 2722. The NASDAQ 100 futures up 0.2%, or up 50 points at 69.55. Currencies, the British pound is at 128.59, unchanged. So we're below 129 now. Yesterday the pound dropped below 129 and it's remained there. The euro is fairly weak as well. So yeah, we're seeing a little bit of a rebound in the dollar here, and in spite of that, gold and silver are holding quite well, which is encouraging. Euros at 112.80, unchanged. Dollar up 0.2% against the yen at 110.58. Dollar down 0.2 versus the yuan at 178.70. The other thing I like to say about China and U.S. trade negotiations is there isn't that much time left. The deadline is the 1st of March, so keep that in mind for a trade agreement. And it doesn't look like it's moving that well at the moment. Crude oil is up 0.5% at just below $53. The yield curve, the 10-year is up 2 basis points at 2.68%. So prices are slightly lower. In bond markets, when the yields go up, the prices go down. The 1-year to 5-year yield spread right now it's at 5.5 basis points. So that has re-steepened a little bit, but it's still inverted. Money, currency, gold, silver. Yeah, there is a difference because a lot of people, and myself included, sometimes talk about that we are under a fiat money system, but technically we are under a fiat currency system. If you really want to be correct, we don't use money anymore to transact, and that's a shame, and that's why I think the system is so screwed up. That's why you need to be protect yourself outside the system, because it's a debt-based currency system, and the currency isn't even backed by anything. The only thing it's backed by is the national debt. And what's the national debt backed by? Well, it's backed by your labors, your capital, the taxation. That's what it's backed by. It's not backed by anything physical. So that's why the national debt keeps increasing. That's why the powers that be, central bankers, politicians, cannot afford to let the system correct for too long. They have to keep pumping the debt. They have to create new bubbles, be it a stock market bubble, be a housing bubble, be an everything bubble, be an emerging market bubble, because they need participants to take on more and more debt. And as the debt is interest, there is interest on the debts. Whenever you create the debt, there isn't enough debt or currency out there to pay off the debt, so they need to keep creating new ones to pay off the old ones plus the interest, and it becomes unsustainable. Just like it is becoming more and more unsustainable. There will be a point where Jim Rickards talks about complex systems, when a little snowflake will cause an avalanche and everything will implode. So in the old days, and I had a little look here, what about the term bank? What is a bank? Well, it comes from the Italian. A bench, a banca is basically a bench. So what is bankruptcy? Well, here we have, from the Italian expression, bancarotta, which means a broken bench. So in the late Middle Ages, when banking was evolving in Italy, transactions were conducted in open-air markets using benches and tables. Think of a dealer's table. Insolvency resulted in the breaking of the merchant's bench. So let's say you had some money. You'd save maybe some gold or silver, some money, and you wanted to get involved in one of the merchant's deals. He might be trying to do a deal with another city, another merchant in another city in Italy to transport, wheat, and they needed some financing, and then you took part in that. But if the deal fell through and you went back to get your money, plus maybe a little bit of profit, and he didn't have it, his bench was broken. So, he couldn't operate anymore if his bench was ruptured or broken. And that's where the term bankruptcy comes from. Then, of course, the goldsmiths evolved as well. They used to be merchants as well. And what people started doing is they started issuing receipts as well, warehouse receipts, because these grew into, not just being outside dealing on a bench, but also storing a lot of the money, gold, silver, right? So they used to give you a receipt that you could come back and get your money back. And that's basically what money is today, the fiat currency. That's what it is. It's just a warehouse receipt. The Bank of England £10 note, it says, "I promise to pay the bearer on demand the sum of £10. This comes from when you could actually go to the bank and ask for your money. you know, and by money I mean gold and silver. Debts were, this is a debt from the Bank of England, and you could actually extinguish that debt when they gave you the money for it, and you gave them the receipt. They could just destroy that receipt because the deal, you know, the debt was paid off. It was, but nowadays it's such a screwed up system that we only deal in debt. We can, of course, amongst ourselves, pay off our debts to each other with these debt instruments, but the system itself, the debt is never paid off. The only way to pay off the debt is for the system to completely implode and liquidate. And then we wouldn't have currency to transact. And why is currency or money? Currency is just a derivative of money, right? It's only a derivative. It represents money. And money is very important. And not because we want to have a lot of money. Of course, it would be great for everyone to have a lot of money, not to have to worry about anything. But money, it just represents activity, or your wealth, your stored wealth, goods and services. And it is the most important, I would say, commodity in the modern economy, in an indirect exchange economy. What's an indirect exchange economy? Well, it's where you don't have to barter, where there's something that is the most marketable thing. It's accepted everywhere around the world, and that is money. And why is it so important? Well, because it's half of all transactions in the modern economy. Everything that you need to transact with, there is money. Well, right to nowadays it's currency, but normally it should be money, right? And so if the currency collapses, it doesn't mean that the economy, you know, the infrastructure, the factories, the farms, the mines, the shops, it doesn't mean that they're not there anymore, that they've been destroyed. It's just that the most important half of all transactions has been destroyed. And that's why it's so important that you have some physical gold and silver, in my opinion, for when this, fiat debt-based system collapses. Of course, it will be something we've never experienced before, probably. You need more than just gold and silver, of course. You need to have be prepared mentally for it. You need to be prepared, how can I say, supply-wise. You might want to have, important things stored. You need to be in a community where you know a lot of the people, where you have friends. In my opinion, it's very important to have friends, to be close to your family. So that's what I wanted to talk about for now today. The fact that, that's why, the system is so on such shaky ground. And the other thing I wanted to say is that, yes, there's a lot of distractions out there. We got trade wars. We've got Venezuela. We've got yellow vests. We got Brexit. Don't let that distract you too much. Make sure you learn about, the most important commodity. Well, at least it's used in all of it's the one half of all transactions that you'll ever make in your life. So aside from being your central bank, your own central bank, by having some reserves of gold and silver if possible. And I realize some people are living paycheck to paycheck, and it's difficult for them to save anything. And but we need to make an effort. So as I said, don't just be your central banker. Learn about the system. Don't let just the bankers know about the system. We all need to educate ourselves about the system. If you enjoyed this video, make sure you hit the like button. Also hit the notification button if you subscribe to my channel so you get notified of all my videos. Share it far and wide. And you can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Bye.